Hey, good morning, guys. Thanks for joining and thanks for dialing in live. It's always nice to have live participants. So if you have questions, use the chat function or just text me, and I'll do my best to try to get them read and addressed and answered. If there's any background noise, try to make sure you're muted so that the recording has as few interruptions as possible. All right, let's jump right into kind of what's going on. First of all, let's start with a fundamental backdrop. Right, we got lots of stuff happening and lots of talk about South American weather. So I'm not a weather guy, and I'm definitely not an expert on South America. But here's what it looks like based on my understanding off of everything that we've read. Okay, so you got to kind of break South America into two regions. You've got southern Brazil, you've got Argentina, Paraguay, in that area, and then you've got northern Brazil. You got two things going on. In the north, it's wet. You've got too much water. You're trying to get soybeans out of the field. You guys know how wet harvests go. There's quality issues. There's delays. There's all those kinds of things happening. And on top of that, they're trying to get a corn crop planted behind it too. So the issue that the market's struggling with more than anything, I think, is that in March you want all of that northern Brazil corn crop planted, and if it gets out into May, that's when their dry season is. And so if you look at the forecasts, it's forecasted to be hot and dry as that second crop pollinates. So they're running into kind of a situation that we had, right, in 2019, when it's really, really wet in planting and you got delays coming into harvest. So that's, arguably bullish corn. And the soybean issue is that it's a delayed harvest, slowing things into the export. So you've got the bulls saying, hey, that's more nearby demand for us. And then in the south, so southern Brazil, Argentina, that area. In the south, they've got the opposite issue. They're actually trying to pollinate their corn crop, and they're coming into that critical period, and they're extremely dry, and it's starting to heat up. So the forecast for the next several weeks is actually not good for their pollination, not good for their crop development. So you got issues sitting there that could be potentially bullish moving into over the next few weeks for both corn and for beans. You got issues in Brazil with their real. You got issues with their stock market. There are issues in South America that we don't have any control of, but could have an impact to our market. And I think the takeaway is this: at least for today, those issues lean favorable to us because they decrease the available supply for their export markets, right? They could decrease demand away from the USDA balance sheet. And so kind of the global backdrop is bullish. Now, what the USDA did, and we're only going to talk about corn here on the balance sheet. So last week was the USDA Crop Outlook Forum. You've probably already seen the news. They've made some changes, and they made some predictions on what's going to happen this year. And it's really interesting what they did. So in their February report, what they had was 90.8 million acres of corn forecasted to be planted at a yield of 172, okay? And then they had some assumptions made on exports and things like that. They ended up with a 1.5 billion bushel carryout in February. At the Outlook Forum last week, what they did was increase the corn acres. They increased the yield to an all-time record national yield, right? Look at the yield compared, look at the yield year on year. And then they only increased the carryout by 52 million bushels. So what they came out and said was, if we have an increase in acreage and an all-time record yield, we have to do that to hold serve based on what we see happening in the export market, right? we have to grow this massive crop just to not get short. So what's the role of the market now? The market is a futures market. The market's job is to discount known and unknown future variables, right? And the participants in the market are gonna fight to explore value. They're gonna fight to discover what the true value of that crop should be. And so they're going to discount all of these known fundamentals against the unknown probabilities, what may happen. And one of the things that they're going to discount is, what if that's not achieved, right? What if we don't grow a 179.5? What if South America doesn't hit the USDA forecast because it's too wet and we get a second crop in northern Brazil that's late and runs into a dry season? What if the Argentinian crop is smaller than they say it is? What if this drought really does happen? What if we get dry? What happens, right? So the trade's going to start discounting some of those probabilities. And the question is, at 472 December corn, is that discounted enough, and does that reflect a fair market value for these arguments against that carryout? And I think that today, if you weigh all of that evidence, right, the conclusion is probably not. We probably need either more acres, or we're going to have to kill demand. So you've got a bullish nearby story and you've got a bullish deferred story, which is why we should continue into an uptrend on corn, and why we're still bullish. There's just too many things that are out there that are unknown. I mean, the trade's now been discounting a 179.5 yield for several days, right? And it's not igniting sales pressure. So what's the bearish argument? Well, the bearish argument is that China is not going to actually buy all of the stuff that they have bought, that they're not going to ship it. Okay, maybe that's bearish if they don't, but you got to look at what's happening in China, right? Their stocks have been decreasing. Their hog herd is being rebuilt. They didn't have stellar crops last year. They've taken all of the beans that they've bought. So why do we think they're going to cancel is the question. I mean, just because they maybe could cancel, I don't know that that's a tradable reason to assume that they will, when you're standing in front of all of the other fundamentals that are in there. So I think the shorts are nervous, and I think they probably should be, because when you balance all those factors out, they just lean to the bullish side. So corn's got a story, and that story, in my opinion, is just warming up. So now we're not going to go straight up. You know, we're going to have down days, we're going to have up days, but I think there's when we look at the charts, we'll see this, right? Is there something out there that causes us to be radically bearish? And at the moment, I would say no, because one last thing that I haven't mentioned is that the EPA this week finally took a stance under the Biden administration that it agreed with the 10th Circuit that the waivers from the Trump administration were illegitimate waivers granted for refineries. That is bullish for ethanol, because it doesn't allow a refinery to opt out of its blending requirement. It actually forces them to blend. So that just happened this week, and I think that is a story and is something that also leans to the bullish side. So we're bullish corn fundamentals. I'm not going to get into bean fundamentals because I just spent nine minutes on corn. I'll just say this: the bean fundamentals are even more bullish than the corn fundamentals, and there's no reason to think that beans are going to turn around and implode here today. It blows my mind that people are still saying that that's going to happen. And I guess that tells you the end's not near, because not everybody's completely bullish. I mean, from a bean standpoint, right? We're talking about a 120 to a 140 crop, and we have to grow 10 million more acres than we grew last year, and have the second highest yield ever just to get to a 140 crop. That's that's really bullish, guys. There's no way to discount that. All right, let's start with the weekly charts. I'm going to breeze through these things real quick so that you can see them. Remember, when you're looking at charts, when you're in this type of environment, higher time frames get more weight than shorter time frames, right? A 1 minute chart doesn't give you any inclination of what the macro trend is. A 1 hour chart is somewhat helpful, but not nearly as helpful as a daily and not nearly as helpful as a weekly chart. So this is a weekly continuation chart of soybeans. We've got this nice little formation that's pulling up here. You can see what we're doing. Leading edge is starting to tick up. We're challenging this high right here. We finally broke out of our wedge, which you'll see very clearly on the daily chart. We should blow right on through this 1438 high, or the high here at 1438 and a quarter. We should blow right on through that and move higher. I'll show you some targets we're looking to see coming on a few other charts. Let me back this out so you can see where we are in relation to the all-time peaks. Right here's your all-time peak, which is $17.98, $18. Yep, $17.98 and a half. There's your all-time peak. You can see where we're trading. Right, we're trading in no man's land. This is current value. There's very little resistance once we break these peaks right in here at 1432, 1450. There's very little resistance up to 1550, 1530, somewhere in there. We challenge this high. We could easily come on up to new highs in the soybean market, guys. This is the fundamentals are there if some things continue to develop. All right, let's look at the daily chart. I'm going to start with the May. We've been looking at this for a couple of weeks. This is this wedge that's been developing, right? We've got, yesterday we had the breakout. Everybody started talking yesterday about, oh my gosh, we closed 20 cents off the high. Well, beans were up 25 cents. They broke up out of their wedge. And what happens when you break resistance? You come back and test it. All we did at the close yesterday is come back and test this 1406 and 3/4 high from this last little result. We closed at 1408 and immediately turned and went higher. There's nothing bearish about that. There's even nothing bearish if we come all the way back down to 1392 and then bounce. That's not bearish either. So anything above yesterday's low at 1384, in my view, is still really bullish. And even if that breaks, our alternative count is a move to 1250 before we turn around and go higher. Now, I'm not going to be bullish forever on soybeans. We're going to outgrow the problem. We're going to have an overwhelming supply. That all those things are going to happen. But for today, the path of least resistance is higher because we don't have an available wall of supply to crash the market yet. So what are our targets? If you put some Fibonacci extensions on here, this isn't magic. 1485, 1517, 1606, or higher. All of those could happen. I think this $15 mark is a logical next step, and then we may have a retracement back to kind of scare some people out and shake the trees again, potentially before we even start another leg higher up into new crop. All right, so here's what new crop beans look like, right? So in old crop, we have this wedge. New crop, we broke out and we broke into new highs. Sorry, let me clean this up just a little bit so you're not looking at all these extra numbers. We've broken up to new highs. Nothing bearish on this chart yet. It's just continuing to move. We don't have any divergences. We don't have any weakness or sell signals here yet. By all accounts, we should continue to march higher. If we put the same extension math up on new crop beans, we're looking at 1250, 1269, and then ultimately 1337 on new crop. And some of that will be driven by the weather in South America, right? Just how just how impulsive are we going to get to the upside will be driven somewhat by that. So now, if you're trading soybeans, I want to put some caution in people's ears, right? $14 soybeans, a 1% move in soybeans is a lot bigger swing than a 1% move was when we were at $9. So if you're trading beans, trade smaller. If you were trading 10 contracts, trade 4. If you're trading 4, trade 1. Trade smaller because the swings are going to get bigger and bigger and bigger. This is not the time in this trend to like double down and take the biggest positions you've ever had, because the intraday swings are going to be pretty extreme. And I think by the time we're in June and July, we could easily see $1 a day swing in soybeans. All right, so corn, where are we at in corn? Well, very similar to beans, right? Corn's starting to march higher. It's got a little bit of concern on South America. We've been trading that big yield and that big crop for several days, and there's been no follow through technically to this week's bearish bar here that we had. Right? There's been no follow through. In fact, we haven't even tested the bottom side of that full body on that candlestick bar. We haven't even tested it, and so I think the best reading on corn is we're up and away, and we're looking for higher highs in the corn market. So where will we go? Oh, sorry, wrong chart. Where's my May? It's up here somewhere. There it is. Here's our May corn. I want to see yesterday's high get exceeded and ultimately come on up to test this 572. Assuming we're successful in breaking those out, our targets are 590, 602, and then above that 634. Will we get there? I don't know. But the reality is that the recipe is there. And guys, if South America really turns dry and we start to collapse the size of those crops, then that would put all the pressure on U.S. weather in that 179 yield. If that happens, look out above, because we're going to get a lot tighter and start talking about a sub-billion bushel balance sheet if that happens, and that all assumes that China is going to keep buying, right? So a lot of bullish fundamentals. Nothing's changed on that front. We're looking higher, and I just don't see any reason to do anything in new crop yet until we get closer in and let some other things develop. Right? We want to let these things go. And if something changes, then we're going to we're gonna play defense pretty quick, especially as we get into April and May, because our new crop spread right now is trading at 2.6. I just don't know how that's going to buy 10 million bean acres, and I don't know if it's going to. I think it'll grow 92 million corn acres. I don't think it's going to grow 94 or 95. So I think we're getting ready for an acreage battle that we haven't seen in the U.S. in a really long time. All right, I got 2 minutes. Let's talk about everybody's favorite stepchild, which is wheat. Wheat is an inflation leader, right? If you look at commodities all over the world, oil, copper, gold, sugar, you name it, interest rates, they're all saying the same thing. And the dollar's now challenging 90 again, and looking to break another leg lower. Wheat is an inflation leader, and it has a declining world stocks number. So the fundamentals aren't as bullish wheat, but I don't know that you want to step in here and short this thing either, if the dollar's going to continue to break. And if row crops explode because they're too tight, wheat's not going to go down, because remember, the higher corn gets, the more wheat gets fed, the more bullish that is for wheat. So this market looks like it's getting ready to pop and explode higher, and I think the odds favor a breakout of 661. And our first target is up here around $7, and we'll see what happens when we get there. All right, that is 750. That's what I have for you. Remember, there is significant risk in trading these markets. Don't trade beyond the level that you can. Consult a professional, talk to somebody about it, and recognize that there is absolute downside risk to any trade that you ever put on, and there's nothing guaranteed in these markets. So I hope you guys have a great week. Call me if you have any questions, and we will talk to you next week.